The stock market is a place to put your money in hopes of going into more. There's simple ways to invest your money, like buying shares of a company, and then there are more complicated ways like trading options. I'm here to explain to you how you can trade options and be as successful as possible while doing so. While trading normal stocks, you don't see fluctuation of more than 3% a day unless there's something crazy happening in either the stock market as a whole or to that specific company. Trading normal stocks is mostly better for long term because typically the stock will go up over time unless you chose some stupid company that's about to go bankrupt. But options trading is a more risky place to invest your money, and while there's more risk, there's more opportunity for reward. When I trade options, I either just buy calls or buy puts. There are more complicated ways to do options like selling calls and puts, but I haven't done that yet. Um, in options, you're essentially betting on the future of the stock. For example, if you buy a call, you're betting that a stock will go up to a certain price by a certain date, and with a put, you're betting that a stock will go down to a certain price by a certain date. If the stock hits the price that your call slash put is set for, then you'll most likely make a lot of money in regards to how much you put in. However, if the latter happens, you are going to lose a lot. I've been trading options for about 2 years now, and I've been very successful. I focus mostly on trading the SPY, which is a mirror to the S&P 500, since you can't invest directly into the S&P 500. But the S&P 500 isn't too volatile and it's incredibly easy to predict, at least for me. And I'm here to show you my foolproof method on how to make essentially infinite money trading SPY options. If we look at the S&P 500 today, it's down but not by a lot, so today isn't a day that I would do anything. If, though, the S&P 500 is, say, down 2% or up 2%, then I might do something. If it were down 2%, then I would buy a call, and if it were up 2%, then I would buy a put. It's really that simple. If it's up a lot, bet on it going down. If it's down a lot, bet on it going up. This method has gotten me a lot more money than I've put in, and I would recommend it to you if I was your financial advisor. Hello?
If you've made so much money doing this, why don't you prove that you